When we're planning for investments, we're always thinking about things like inflation. How can we grow higher than inflation? But in South Africa, we have to really start considering the added layer of protection for the rand devaluation. In this video, we're going to talk about how we can protect our investments and our overall wealth from the devaluation of the South African rand. Hi, my name is Yolanda. I am a wealth advisor, and it is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly and build generational wealth. And we're talking about investments today. We're talking about the rand dollar exchange rate. And let's look at it. Now, most of us don't really pay attention to the rand dollar exchange rate, except if we're involved in the industry, if we're importing or exporting products, if we're buying something on Amazon, for example, or maybe once a month when it's time to look at the petrol price. That's the only time we're looking at the rand dollar exchange rate. But if anything, this year especially, we have seen massive fluctuations with the South African rand and the United States dollar. And this exchange rate has a bigger impact in our lives than just the petrol price. In 2020, the average rand dollar exchange rate was 16 rand 47. In 2021, the average rand dollar exchange rate was 14 rand 79. In 2022, the average rand dollar exchange rate was 16 rand 37. And in January 2023, the rand dollar exchange rate was over 19 rands to $1. So the major thing that the rand dollar fluctuation does is it drives up inflation because we buy a lot of our goods and services in United States dollars. Oil, for example, we feel that pain every month. When the rand is valued really low against the dollar, we are paying more for fuel. Right, our petrol prices rises and the cost of goods and services just increase because they're all carrying the load of their petrol price. This affects your jobs. It affects your housing options because now the petrol price has become really hectic. You want to live closer to work. Maybe it's a little bit more expensive to live closer to work. So you got to consider those kind of decisions as well. It definitely affects the performance of your investments, especially if you're in South African rands, you're in South African investments. Remember, even if you're making a 10% return, we have to look at the rand dollar exchange rate because you're investing to build wealth for more financial security. Now you need to invest more because the rand is devaluing so fast. Definitely affects your retirement. And this is one thing I've started for an additional layer of planning when it comes to my clients is what are we going to do to shield from a weak rand to ensure that you retire properly. So having a basic understanding of the rand dollar exchange rate is a valuable piece of knowledge that you have to have because it impacts almost every aspect of your life. In many economies like South Africa, countries operate on a floating economy. This is where the country is constantly fluctuating to the trading dynamics. A country's currency can rise due to the demand or supply of a certain good or service. And various factors come into influencing this exchange rate. This includes things like political stability, for one. When one politician goes on a local or an international platform spewing nonsense, you will see the rand dollar exchange rate. And there's no greater example of that is Mr. Weekend Special when then President Zuma announced Desmond Royan as an interim or as the permanent Minister of Finance late on a Friday night. That shook the markets, and that whole weekend the rand just devalued. A nation's economic health also affects the rand dollar exchange rate, right? Like right now, things are not looking so good. We have foreign investors just pulling their money out of South Africa. Expectations in inflation also influence the rand dollar exchange rate. Oh, we saw this recently when the United States announced they're not changing exchange rates. And that affected us as well. But the primary driver of the rand dollar exchange rate is global investors and their overall risk tolerance, which largely depends on the various factors we just mentioned. When the rand loses value against the dollar, it tends to trigger a rise in fuel prices because we buy oil on foreign markets using US dollars. And we saw recently countries like India, China, and Russia trading oil in their local currency. We're not big as those countries to make those kind of demands. We're still very small in BRICS, so we are trading in dollars, in a foreign currency. And Brent crude, which we use here, is priced in US dollars. And sometimes the effect of oil prices is not often felt immediately. Can take up to a month or so, and we know that, as it approaches month end, we'll know what the oil prices are. If the oil prices are getting low and the rand is devaluating, we're not going to enjoy those low oil prices. On the flip side, when the rand does gain, ideally it should become more affordable, but technically we don't even see that massive drops in fuel prices in South Africa, mainly because just under a third of the fuel price is taxes, and those taxes are just increasing year on year. And the ramifications of this oil price just spreads everywhere. It's not just at the pump what you pay to fill up your tank, because goods and services need to be delivered. Somebody comes to your house, the plumber comes to your house. Now he has to factor in the fuel price and hike his price that we have to pay for him to get to our house to provide us with the service. Deliveries, delivery of food to the stores, when we go out and we pick them up, all of those little increments throughout the supply chain all affect inflation. So it's not just oil that's affected with this, right? It's all kinds of goods that we import into the country, especially poultry products, additional food that we import. All of those prices increase, especially things like vehicle parts. Not everything that we need as a nation is manufactured here. We got to bring it in from China, bring it in from Germany, from Europe, from the US, and they all want dollars. Nobody's trading in South African rand. Elevated inflation has a detrimental effect on the entire economy. Like we're seeing, it's becoming more and more expensive to get less and less in South Africa. This makes job creation a challenge, because if a company doesn't know what the inflation is, or just skyrocketing, it's not at a stable point, they are not going to hire staff because they are uncertain how they're going to pay the new staff. So they rather keep things at the status quo, wait for things to settle, create bigger buffers to manage inflation, to buffer against the rand-dollar exchange. Therefore, businesses don't hire. Some cases, they fire staff, and we're seeing that now. The mines are taking a massive hit. Thousands upon thousands losing their jobs. Ironically, the Reserve Bank in South Africa, they increased their interest rates to try and combat inflation. But the problem we have in South Africa is it's not spending or consumer spending that is driving up inflation, or it's not demand side that is driving up inflation, it's production side, right? It's the various taxes at every level. When Eskom increases their prices every year by 15, 20, 30% a year, and us getting less and less electricity, we're paying more, we're using less service, we're using less power in our businesses, not producing more, and that just picks up inflation altogether. So raising of interest rates doesn't really help our cause here. It's basically the production side contributing to inflation, plus the interest rate contributing to inflation, and essentially we have an elevated inflation for no reason at all. Okay? Consumer demand is low, the rate of borrowing is too high, and it doesn't make sense. And I know this, the economists will tell you that inflation is at around 5% now. But really, do you feel a 5% drop? Do you feel inflation dropping? Look at the price of fuel, the price of clothes, food. It's insane. For me, I honestly don't believe that inflation is in single digits. It's in double digits, because I'm spending more. And some figure that a journalist or an economist throws up in the newspaper doesn't relate to me, because I'm spending more. And I'm sure you're spending more as well. Well, there is a silver lining when the Reserve Bank increases interest rates. This means that any cash that you have in interest-bearing investments, even if it's in the bank and banks give you lower rates, but you can invest into other interest-bearing instruments that allow you to gain higher interests. In some cases, some of my investors are getting returns of over 10% in risk-free interest-based bonds, right? So there is a silver lining here. So opportunities can be offered if you are managing your money well, if you're not into consumer debt and you have some extra cash to spare. A weaker rand is also positive for offshore investments. Offshore investments is when you're holding the dollar investments. So if you are saving in foreign accounts, dollar accounts, euro accounts, when the rand weakens, your return will basically in rand value increase as well. So that's another shield. Another hedge for the rand is to invest into foreign currency. So to put it another way, if you buy dollars at an exchange rate of around 18 rand to the dollar, for example, but the rand weakens to 21 rand to the dollar, the rand value has increased by 16.6%. Are you doing nothing at all, just holding foreign currency? And I know essentially that the dollar is devaluing, all right? The Americans are just printing money like crazy. The dollar is devaluing if you see those graphs spread over time. But the rand is devaluing greater than the dollar. So it's worth looking into holding dollar investments. So how can you get your hands on some dollar investments without the paperwork, without the massive hurdles? Firstly, South African banks offer dollar accounts. Discovery does it. You can download the Discovery app, right? And if you use this coupon code, the one that's on the screen, when you're signing up for a Discovery account that allows you to hold dollars, right, you get 5,000 free Discovery miles, which is actually worth more than rands. In the market, we're all at the mercy of the market. It is volatile. It is uncontrollable. So it's really wise to diversify your investments and not hold everything in South African rands. This will allow you to mitigate some of the impact of a devaluing rand. Speak to your financial advisor about how you can create a well-diversified portfolio. And just remember, the content of this video is not financial advice. Any content of mine that you see online is never financial advice. It's financial education. It's there to give you thinking points to say, this impacts me. Maybe I should talk to my advisor. Or this doesn't work for me. I should stay away from it. But essentially, it's to get those wheels turning in your head to try to understand a little bit more. Don't take financial decisions on things that you hear online. Speak to a professional. If you need a financial advisor, click the link where you're watching this video. I'll be happy to help you. I am a financial advisor, but this is not financial advice. So what can you do? Consider investments into foreign property. It's not a big deal, all right? What you want to do is get into global REITs that will allow you to hedge the rand and give you some currency protection. Foreign shares, foreign bonds, all of which is available in South Africa. Your focus here should be assessing the value of these investments rather than getting caught up in exchange rate worries. Hopefully, you are a medium to long-term investor trying to protect the devaluation of your money. The value of all these assets, shares, bonds, and property is all influenced by various market factors, business performance, political climate, and all of these carry more weight than something short-term that could happen to destabilize. What really matters here is the timing of your investments. Remember, whether you're selling tomatoes or shares, you want to buy low and you want to sell high. So you could be the best investment in the world, but if you cash out at a lower rate than you invested, you're going to take a loss. So timing here is very important. You're going to know at what point that you enter and what point that you're exiting the investment in order for you to be making a profit. Right? If you're investing in cash or cash equivalents, now the exchange rate is something more that's on your radar, because you are investing for the short term. Now, the currency fluctuations for the short term can have a massive impact on your portfolio. And especially in the case of overseas cash that you're holding outside South African banks or outside the South African financial system, they don't offer as high interest rates as South Africa does. So here you got to really be strategic about your timing. Take advantage of those favorable exchange rates. The other option you have is, rather than trying to predict what is going to move where, you have the option to gradually invest your money in stages. So you want to spread your investments as you enter the market over a period of time. For example, if you have 100,000 lump sum, you don't take the 100 and you dump it into an investment. You let it enter the market at various levels. South Africa, we call this phasing in. It's something that me as an advisor, I would do for client. All right. So if you have a lump sum, and we will tell the investment house, okay, a third of this lump sum needs to go in now, a third in 30 days time, a third in 60 days time. And you can phase in basically 3 months, 6 months. You have those options. So the strategy can really help out smooth things out, because you are not just entering high or entering very low. You're entering at different points in the market. Another useful strategy to protect your wealth from a devaluing rand is by considering local rand hedge unit trusts. These funds invest in companies that earn in substantial offshore currencies. They get a lot of their money from overseas revenue. This serves as a built-in guard for rand devaluation, because companies' performance is not based 100% in South Africa. A good chunk of it is in the rest of Africa or Europe or the US or China. But that company is not really hit by any fluctuations in South Africa because they are getting dollars and euro. So you can set up monthly debit order to invest in these Rand hedge unit trusts, and you can enter the market again at different points, a Rand cost averaging strategy here to try and get into this type of unit trust where you're hedging the Rand. If you need access to some Rand hedge unit trust, click the link where you're watching this video. I'd love to chat to you one-on-one. If you want to know more about offshore investing, check out this playlist.